really good example too. The divergence can also result in temporary supply demand, disruptions or changes within a stock, such as a really great example is when Warren Buffett was buying up ConocoPhillips. He took a 4.5 billion stake in ConocoPhillips, or maybe Coral Icon, or doing some kind of corporate raid. So this is kind of a, these are things that create these kind of separations and movements. So for example, here's ConocoPhillips, and here's XLE, which is the ETF with the sector that's in. And so you can see here the correlation coefficient on the two are very tightly correlated, 0.98%, 98%. Now at some time, they separate, and what happened here was Conoco really started to outgain and strengthen relative to the industry it's in, XLE, and that made for a great spread trade. So here's just an example of what that looked like. So you can see here, if you'd gone long ConocoPhillips and short XLE, this was on about the 20th of November, right here. Okay, you can see here, cycle reversal my indicator there, momentum's going positive. So you can see that correlation starts to really widen out. So at that point in time, this was about when Buffett was starting to buy, big hit his huge stake, and he started buying, and that thing just took off. So at that point in time right there, ConocoPhillips 1-to-1, if you bought one share of ConocoPhillips, sold one share of XLE, Conoco at that point in time was going at $25.39 per share below XLE. Now, that was on the 20th of November. And then, you can see here, 4 months later, right here, now that spread, look at it, now it was a positive $1.85. Now ConocoPhillips was $1.85, $1.85 over XLE, right? So look at that huge value. So it went from 25.39 under to $1.85 over. So that's a gain of $27.24 per share. And if you did it 100 shares, to make it equivalent to one option contract, 100 shares, that's a $2,724 gain right there. So if you did 100 shares, you would be up $2,724, no matter what the markets were doing. The markets could have been going straight down, but this pair correlation, tightly correlated, had Conoco super strong. So Conoco could have been going up, or Conoco could have gone sideways, and XLE was going down, something like that. So that's the beauty. And these are a lot of fun too. I mean, they're not fun if you get it wrong, but they're so much fun when you get it right, because you're using your noggin to think of these correlations and what can happen. So you're thinking 2 or 3 steps ahead. What if this happens? What if that happens? And this would be a good pairs trade. And so that's what you're looking for. So let's take a look at some opportunities and examples.